wild day on Wall Street. Stocks hammered again. Your 401k account slammed again. People are worried that here we go again, but this isn't 2008 all over again. We're going to explain why and also talk about what would happen to the presidential race if the economy did slow down again. Then Bill de Blasio's poll numbers are down, and that's getting Republicans pumped up. They're already working to bring the mayor down by raising big bucks to try to drag him out of office. Then a topless parade in New York City as women rally to topple Mayor de Blasio's clampdown in Times Square. We cover it all, even the people who don't cover themselves. Good evening and welcome to RFL. I'm Andrew Whitman, in tonight for Richard French, and we begin tonight on Wall Street. That sound you hear is a sigh of relief that it's over, or at least it is for today. The Dow plunged more than 1,000 points this morning. That's never happened before, but it is recovering a bit and did so by the end of the day. It still lost nearly 600 points. Now add that decline to the 530-point dive on Friday, and you're looking at a major sell-off. So the question is, what caused it, and should you be worried about it? A short time ago, I spoke with Rick Unger. He's the co-host of SiriusXM's Steele and Unger. He's also a senior political columnist with Forbes.com. Rick, general consensus seems to be that today's volatility is all about China and oil prices. Do you agree?
I don't think it's all about it. I think both of those certainly play a part in what took place. But you start from the point of view that what we saw at the opening this morning was very much the result of algorithms and computers reacting to what the news had been over the previous 24 hours. That kind of sets the stage. That plus some discomfort, I think, among investors for the past few weeks, you get a day like this.
Are there any policy factors here stateside that you think might be influencing this process or the sell-off we saw early?
You know, I really don't. I think if you look at policy here, look, you're getting a slow growth in the economy. It's certainly not what we'd like to see, and we'd certainly like to see it get back to the days of 4%. But no, I don't think that policy is really precipitating this, except if there was reaction to the possibility that the Fed might in fact do as they've been promising to do and raise interest rates. Then maybe that might figure into it. But I really think that's part of the whole general psychology.
Everybody sees the Wall Street numbers, or they see the charts and the big decline at the start of the day today, and they immediately flash back to 2008, the last time we saw similar dips in the Dow. What are the differences between what we're seeing today and what we saw in 2008?
Well, for starters, the numbers are very different. When you got up this morning and you saw that in excess of 1,000-point drop, it's a little unnerving, to say the least, but you have to realize that you're starting with a higher stock market. That's number one. Other differences, you don't have the factors at work that came into play in 2008. There was a very good reason for what happened in 2008. We all know what they are. I don't see those factors in play today. I really think this is just a general cleaning out of the stock market, which, frankly, I think is a good thing every now and then. You have to constantly test and rebuild bases from which to start your next run. But I don't think you're seeing anything that foretells a constant downward motion here.
And so from your standpoint, and I hate to paraphrase what we heard from John McCain in 2008, but at least today it seems like the foundation, at least in your mind, of the U.S. economy remains strong?
Well, I think it's certainly stronger than it was when John McCain made the mistake of saying that in 2008. As I say, it's not as good as you'd want it to be. I think you can say this, around the world. It's certainly not as good as you'd want it to be this far into a bounce back from a recession. But it's certainly not in the territory, at least I don't think, that's disastrous by any stretch of the imagination. And I don't think that there's any reason to anticipate that something around the corner is going to push us back down. The real question should be, can we accelerate the growth rate, which is slow. It's not as good as we'd like it to be. And whether or not the market is reflecting those kinds of thoughts or really just had a blip and what you call a bad day.
But it sounds like from your standpoint, you don't see anything in there that would lead to a sustained decline, something where this is just the first shot in a series of these things. Do you think this is going to be a one-off?
I don't think so. I mean, you may see some further way to go downward, but again, this is not uncommon. People have a funny way of forgetting that. We see this every couple of years. You see the market retrench. You see it have days like this. This is all part of the game. And what I remind people who are kind of freaking out and saying that this is 2008, You know, when the market took its dive back in that year, it went down into the lower 8,000s. Now we're sitting here in the high 15,000s after a horrendous day, and everybody's worrying. Guys, you know, it was only 2008, and we're already in the high 15s after a really terrible day.
But we did have that horrendous day today, and on Friday the Dow sold off 500 points as well, but you think that's all part of the same blip?
Yeah, I think you're in correction territory, obviously. You're still not at bear market territory. I don't personally think that you're going to get to a bear market. You could, but I don't see it. I think it's a fairly normal correction. Nobody likes to see it. If you're a long-sided equity player, nobody likes to see the correction, but corrections are inevitable.
Finally, Rick, comes the question of what we do next. There are two policy centers we could turn to, one being the White House, one being the Fed. What, if anything, should either one of those players do in response to what we saw today?
Well, I don't think the White House is a big issue. I think the Fed is the real question. You know, they have two choices. They have been talking about raising interest rates, getting out of this quantitative easing pattern that most people believe, and I think they're right, has really had the biggest impact on the improvement, the increase in the stock market. You know, you keep money basically for free, the stock market's going to react positively. Now you have this fear that if they go ahead and raise the rates like they've been saying they're going to by the end of the year, that could push the stock market down. Depends who you ask. We've had a debate around my office here today. One person saying, no, they should back off of that because it's going to tank the market. And then my point of view is the Fed should do what the Fed is supposed to do, which is not worry about the stock market. It's supposed to worry about economic policy. I think they should go ahead with the increases because I think that the economies of the world are now at a strong enough point where it no longer warrants having this 0% interest rate. I think the market will take it in stride. It may have a couple of bounces in reaction. That's to be expected. But I think that things are strong enough that it can handle it.
Rick Unger, co-host of SiriusXM's Steele and Unger, also senior political columnist with Forbes.com. Do not call him with complaints about your 401k balance at the end of the day. Rick, thanks very much.
My pleasure.
So that is the economic view on today's Wall Street slide. As for the political, we turn to our panel. Jeannie Zaino is here, professor of political science at Iona College and professor of campaign management at NYU. Welcome back.
Thank you.
And Dominic Carter is here, political journalist and author. And we heard Rick Unger say this is a global issue, no particular economic, fiscal impact in terms of the U.S. economy. He thinks it's a bit of a correction. In terms of policies and politics, if things turn bad in the economy, the out party always gets blamed, right? Or always benefits from that. So it would hurt Democrats, it would help Republicans?
Yeah, and I think in this case what we're seeing is the two people who came out most strongly in response to this were Trump and Sanders. And I don't think that's a surprise because it's the populists who are going to benefit from this kind of fall and this kind of plunge. We heard Donald Trump out there talking about the fact about China. We heard Sanders out there talking about the issue of trade, also talking about Wall Street. This fits within their populist, isolationist mantra. So I think you're right. Both the Democrats will be hurt by this, and also anybody seen as an insider, anybody seen as an establishment or centrist, and the populists will benefit from this.
But Dominic, if this winds up being a bigger issue, the economy and concerns about the economy, and it's a big if at this point, but this isn't 2008 where regulatory policies on Wall Street were largely seen at the time as contributing to the cost. Is there any chance that the economy as an issue in 2016 could be something of a jump ball, and whoever gives the best prescription for it, whoever comes up with the best ideas on how to cure it, they're the ones who benefit?
Well, great question, but I don't see how it's a jump ball where it can go to either party. Neutral, I believe you're alluding to, because Democrats have the White House. So those that are in power face the blame on something like this. And this is an issue that's tailor-made, custom-made for Donald Trump and his campaign. Folks are not going to focus on his foreclosures. Folks are going to focus on the fact of his business success, if you will, and the fact that he's perceived as a great businessman. So he gets to go on Twitter this morning. Well, let me backtrack. I found it amazing when he was in Alabama, the 30,000 people on Friday night, in which I watched him say that he wished the election were held right then and there. And if you're Donald Trump, based on his poll numbers, of course, you want the election now and not several months from this point. But in my opinion, this plays right into Trump's hands. That's why he was on Twitter this morning saying, I told you so, about the U.S. economy being too closely aligned with the economy in China. But this plays to Donald Trump.
You agree, Jeannie? This helps Trump if it continues?
I think it helps Trump, and again, I think it helps Bernie Sanders or anybody else who's seen as a populist. It's really fitting within that mantra. And so, I was startled to see him come out today, and then I thought, oh, of course, as Dominic's saying, this is exactly what he's going to do. Because people aren't going to think about the ins and outs as to what happened and why this correction, as you called it, or your guest called it, is taking place. What they're going to hear is that the Obama administration, the U.S. government, once again screwed us up vis-a-vis China. We have let everybody run rampant all over us. They're looking for the simple solutions that people like Donald Trump are offering. He's saying he will go out and do everything he has as a businessman from the White House, and that will resonate. But again, I would also caution it's a bit early to be talking about this having a huge impact on 2016. We're still, more than a year away.
It's a 1 or 2 day event, at least right now. That leads to my next question, which is there any way to gauge at what point this becomes a viable and continuing issue heading into 2016? How many more days like today do we have to see before the economy really becomes a top issue?
I think the economy generally is always a major concern, so I think it's going to be an issue. But in terms of, something akin to what we saw in 2008, I think we'd have to see something of that scale, of that magnitude. If you look at and people look at the facts on the ground, the U.S. economy is very strong right now, despite what's been going on Wall Street. You look at the unemployment numbers. If the Obama administration had been able to come out and talk about those things, better support the policies they've put into place over the last 8 years, they may not get the, some of what I think they're going to feel going into this if this kind of thing continues.
Dominic, days like today always have me thinking back to the 1992 campaign, Bill Clinton's campaign for the White House, his first one, where the mantra from George Stephanopoulos in the War Room was, it's the economy, stupid, reminding the candidate and reminding the staff that every day to focus on the economy, focus on the economy. But the economy wasn't in terrible shape in 1992. It just felt like it was underperforming. At what point does that creep into people's thought process that, maybe it's not the number one issue, but this does impact the whole, are we on the right track, wrong track for the nation?
Well, it's my contention that it's always there, and that's why I say this plays to Trump. I watched him with great amusement on Friday night because one of the reasons why he's connecting and why some of the candidates do better rather than others is they take a campaign issue out there to Americans all across the country about the fact that jobs have left America. And that's true, jobs that have gone to other countries. And so when a Trump comes along and says, I'm going to negotiate, they're not going to take advantage of us anymore. I'm going to negotiate a better deal. The professor used the word resonate. It does resonate, especially in places like Alabama, Iowa, New Hampshire, South Carolina. And so the one person that I think, if the economy becomes an issue, has the potential to hurt, and one would think that right now she perhaps can't get any more bad news, is Hillary Clinton. You referenced her husband in the 92 race. Well, she was part of the Obama administration. The economy is doing well, but if it goes south, she was part of this administration.
When there are questions about the economy, what's the approach that you think voters want to hear? Do they want to hear somebody say, I got this, a la Donald Trump? Do they want to say, here's my plan, a la, I'll say Hillary Clinton, here's my 10-point plan for how we're going to get the economy going? Here's my experience. What do you think voters want to hear?
Well, I think it depends on what voters you're talking about. So, mentioning Hillary Clinton, I think, is really important because from the time she thought about running and then got into this race, the one thing that has dogged her before the email controversy was the fact that she has been too closely tied to Wall Street and all of the economic issues that are, kind of have dragged her down and made her not a favorite daughter of the left. And that is why we've seen this rise of Bernie Sanders. He's out there every day talking about the 1%. So, I think what people want is they want the plans, they want the specifics, but they also want to feel the authentic sense from somebody like Hillary Clinton that she is trustworthy when it comes to the economy. And unfortunately, her ties to Wall Street and other things have dragged her down. And it's funny because Trump, is a billionaire, and yet he's been so open about who he is and how he got his money, he hasn't been dragged down by that.
And all this despite the fact that, at least from what we're seeing so far, this isn't a specifically Wall Street issue. Wall Street's where we're seeing it, where we're feeling it right now, but it's not like this is caused by regulatory problems on Wall Street. This, appears to be caused by China and the price of oil.
Yeah, absolutely. But again, I think, some of those specifics elude people. When people are talking about these things, they just say, oh, it's all of those people on Wall Street, the wealthy, the powerful. And that will include people like Hillary Clinton, unfortunately.
And that tags into Bernie Sanders,
Sanders,
and why
yeah.
he's connecting and why he's pulling out thousands of people at campaign rallies, and frankly, why Hillary Clinton is not.
Well, it's only a political issue if people feel like it is, and so that's why we're taking your temperature as we ask you to get involved in our conversation on Facebook and Twitter. Here's tonight's question for you. Are you worried about the stock market and the economy? Believe me, the candidates who are running for president, heck, even the candidates who are running for mayor are the ones who are going to be checking out this answer to see what you are saying. We're going to take a break. When we come back, Mayor Bill de Blasio is fighting with Governor Andrew Cuomo. Stop me if you've heard that before. Republicans are now already fighting to take back Gracie Mansion, even though the election is 2 years away. We're going to tell you how they're trying to do it next.